Hey guys, Mike here. So obviously we got CPI data today, 8.5%. Not bad, right? I mean, come on, 8.5%. Who cares? And what happens? Market just takes off, right? I mean, gaps up. Say, oh man, it's gonna be a great day, and it starts running up, and then whatever that is, I think it was a 10 or 11 on the dot or something. You know, just absolutely said, hell no. Here we go. Here's the roller coaster. Oh my God, we just broke down through support. Oh, not good at all. Now we go down to another support. Hold on, we're going to break back through this. We're on our way back. Absolutely not. Then we're going to break through it again. And no, we get rejected. So what caused it? That was the thing. I mean, everything was ripping. And really, one of the things that happened was cue the Fed talk.
Yeah, Lael Brainerd talking right now at a conference with the Wall Street Journal. Scott, she's making some optimistic, maybe guarded comments about the inflation report this morning. Several economists, and now Brainerd, who is the, presumptive vice chair nominee for the Federal Reserve, saying that she welcomes the moderation in the core goods sector. You'll note there was the goods sector came down a little bit, mostly propelled by a decline in used car prices. But, you know, I say guarded because she says there's a lot of potential upside risk to inflation down the road, including the invasion of Ukraine by Russia, as well as the China lockdown. She said these present upside risks to inflation. Overall, Scott, she gives a pretty optimistic view of the ability of the Fed to raise interest rates and not create a recession, suggesting there's a lot of strength in the labor market and in the economy. So she's optimistic about that. But these are, I don't know, maybe the first positive, if very guarded, comments on inflation from a Fed official in a long time.
Yeah, she does say that the recovery can be sustained even as we bring inflation down. Right, that speaks directly to the question of whether they can engineer the soft landing amid doubts that they can actually pull that off. And then the other thing I find interesting that she says, too, is that financial conditions, she thinks, will bring demand down to more sustainable levels, i.e. tightening policy, tightening financial conditions a bit, is going to do the job she hopes and thinks.
Scott, let's remember, tomorrow we got the producer price index, and that's, you know, probably going to show considerable pressure in the pipeline for inflation at the producer level that needs to work its way down into the consumer level at some point, or it will be absorbed in lower profit margins. So, and it's not entirely clear to me that we have absorbed all of the price increases that are coming from what's happened in Russia and the China lockdown. So
who knows if that's what it was. But, you know, it's just, I put this in a video a couple of days ago or last week, whatever it was, saying that, you know, whenever the market starts moving in the direction they don't want to move in, all of a sudden, here we start cue Fed official talk. If it ain't the Fed official, it's them reporting on a Fed official speaking somewhere else when this is happening. And, you know, there's still this tug of war. Are they going to raise rates, not raise rates? You know, and again, I say it's an election year, guys. These politicians got to get votes either way, and plus they have to get inflation under control. I mean, and maybe we peaked. God forbid, and let it go over 8.5%. You know, you remember the folks who were calling for the peak back in December, right? And how it was transitory, it's only temporary. And like I said, whatever your definition of temporary is, I don't know what that is. To me, it's not a year. All right, it's like maybe 3 to 6 months is temporary. And, you know, I sent some of the members this morning showing, look at this from January 2021 to now. Like every month I kept hearing, don't worry, it's going to go down. Oh my God, no it didn't. Look at this. And so hopefully so, again, like they're saying, we might not have felt all the effects from all, you know, what's going on. Because nobody even talks about the China lockdowns. Like, nobody even talks about that. Somebody sent me something last night. It was of a news channel. I'm not going to put it out there because I don't know if I can trust the source, whatever. But, you know, and I'm looking at what's going on over there. If it's true, it's like, that's kind of fishy. Something seems off. And so if you happen to live in China or around there, have family lives there, let me know what you're hearing. But the fact it's still going on, and now they're talking about there's actually other places outside of those major cities that are starting to do testing and lockdowns too. Like, I don't know, something strange there. But, you know, we get a lot of stuff from China. And so we ain't even felt those effects yet. That's what's so funny to me about it. We really hadn't felt those effects yet at all. That's coming down the pipeline. And so remember, and like I've always said, companies, they're still passing on costs. That's what he's talking about. They have planned price hikes for the consumers, us, already planned in this year to keep going because they can't pass them all on at once. So it's going to be interesting. Hopefully it's peaked. And, you know, the one thing that's playing out, and I will say this, one thing that was interesting is I'm going to show you where inflation is and where it's not. But on the chart real quick, going back to it, one thing that's playing out, and I showed this to the members, was the MACD, right? When you get this cross right here, the death cross, whatever you like to call it, moving down, and what's happened? Since it happened, we've sold off. And I showed them Friday when I sent the members video out. If you start scrolling back, you'll see every time this happens, boom, sell off. Another time, sell off. Another time, there's another sell off. And so, right now that's just playing out too, and on the technicals and stuff. And so that's one thing that's going on. The other one is, look at where inflation is. That's kind of a key thing here. And you can just see, obviously, gasoline through the roof. Used vehicles came down quite a bit, which was nice to see, thanks to GM and Ford calling them out. Hotel rooms, airfare, rental cars. And so all that kind of adds up. And then you go down the list here. What surprised me was rent not being even more than what it is. Again, this is where you live. I said in Florida, rents increased 40% last year. And so, that's just, I guess it depends on where you live, and it's kind of hard to make out. But one thing about car prices I want to make you aware of, I just happened to run across this interview today, and there's some kind of big thing going on with executives from car companies speaking, and it really surprised me they would come out and just, I guess, be this blunt. Maybe they're trying to brace people or something, because it doesn't help their cause at all, and say what they had to say to warn us about car prices.
Unfortunately, I don't believe prices have yet peaked. Raw materials, steel, aluminum, cobalt, lithium, everything's continuing to escalate. And manufacturing vehicles is a low margin environment. So unfortunately, the way I see it is manufacturers are going to have no choice but to pass these costs on.
As long as we see more demand than supply, I think we're going to continue to see higher prices.
And so I don't know about you, but it's not, I wasn't surprised that the car prices are going to continue to go up, because yes, they're right. All those materials, all those prices have gone up. That's not what I was surprised about. I'm just surprised they're just so blunt and honest about it, because obviously their stocks have been getting hammered, and I don't think it's just going to help them maybe. But it's like, I don't know who the message was to. I guess their consumers saying brace for this. So that was interesting. And so I don't think they would just come out and lie, because it doesn't put them in a good spotlight at all to say that. They got nothing to gain from saying that. And so that was surprising. But I'm going to end this video with, saying this, that I found, I've said many times, institutions, right? They ride it on the way down, they push it down, and then they ride the stock market back up, right? But you rarely get a hedge fund manager or anybody who manages a lot of money will come out and say that out in public, right? But I finally found somebody today, just ran across this right before I started doing this video, and I said, I'm going to put this in there, man, for those who stay for the end of the video. And, watch this guy. This is his strategy, where he does it. And he's a blunt guy, very blunt, if you've ever seen him get interviewed before. And most of you probably never seen him. But he's very blunt. I've seen him do many interviews. And he's not really, a bull or a bear, I guess. He's just blunt. And it tends to take people off guard sometimes. But this is he explains exactly what I've said the bigger institutions do all the time.
What is your strategy then? Is it to raise cash during rallies? I know cash was one of your big calls of the year, which has been a good one. Is that still the strategy here?
Yeah, for us, I do this every day. So the strategy is pretty simple. We tweet about it, which is, when the market really sells off and gets super oversold, then we cover and we try to get long. When you get a rally that gets back 70% plus of the prior leg lower, we go ahead and we start to reshort again. And we'll change that if we think, inflation comes in way lower than what we're thinking, or demand hangs in a lot better. But right now, that's not the case, and valuations are still high.
And so I just want to put that out there to you guys. Wasn't crazy. This does happen. This is a lot of institutions doing this. There's nothing wrong with it. And, so far, I guess it's worked out pretty good for him. So, hope you got something out of it. Hit the like and subscribe button if you want to. If you want to join up to the membership and get daily news updates, then you can go ahead and hit the link down below right there. And so, appreciate all you guys watching. Let me know what you think is going to happen tomorrow. You think we're going to go back up? What do you think is going to happen the rest of the week? Got earnings coming up for the banks. What do you think is going to happen there? I sent all kinds of stuff to the members this morning about that. So, we'll see. It's going to be an interesting week, an interesting earnings season. That is for sure. So, buckle up. Have a good one, and I'll see you tomorrow.